Hi, ladies and gents. Welcome to another podcast. I'm going to finish off the income statement. I'm going to do what's called the profit and loss account, which is the bottom half of the income statement. But very quickly before I do that, I just wanted to cover up two sort of anomalies in accounting that you need to be aware of at the stage most of you are at. The first one is when goods are taken out of a business for the owner's own use. And up until now, all we've ever done is we've always debited our purchases account, because we've gained a non-current asset and therefore the assets of the firm being going up, and also purchases are an expense of the business during the course of the year. But here we're told the owner's actually taken some of those goods out, 4,000, and what we're therefore going to need to do is to reduce our purchases and introduce something called the business entity concept. So what the business entity concept is, we need to keep the affairs of the owner and of the business as two separate things. So we're going to reduce our purchases because those purchases were never ever bought for the business to use, and therefore they belong to the owner, and effectively he's taken them out of the business. So we would credit our purchases, and the other account is going to be affected our drawings because it's stuff being taken out of the business by the owner, and it was 4,000, and that will increase the overall amount of drawings. Now, the other slight anomaly that you need to be aware of is what we do with the drawing account at the end of the year. And what we do when we balance it off the way we normally would do. So we're going to hopefully find it again. What we're going to do is put the totals in like we've done with every other type of account. The totals clearly on our drawings account here are going to be 14,000. It's not a difficult sum to do. And we're going to put 14,000 on each side. And we're not going to have a balance carry forward. And in this case, we're actually not going to send that amount to the income statement either. What we're going to do is we're going to send it to the owner's capital. It's going to reduce the amount of money that the owner owes to the is owed by the business. So capital 14,000. Okay, and we're going to go and put the drawings into the capital account. This will appear again in the statement of financial position as well. We write a summary of the capital account for the year at the bottom. And what we'll imagine that the business is also going to make, I'll say it made £15,000 profit. That's actually going to increase the owner's investment in the business because all the profit belongs to the owner. Okay, bigger side is going to be the credit side in this case, so that total is going to be 60,000. The total on the debit side needs to be 60,000, and therefore we're going to have a balance carry forward. The balance carry forward is going to be so that's 70,000, and that is going to be 56,000. Put the dates in. Don't forget to put your balance report forward at the start of the next year. And that's going to be 56,000. And that's our capital account finished. That's really the last two accounts that we need to be able to balance off. Right, profit and loss account. This one is easy. I don't think any of you will have a major problem with it. We've got to the point of gross profit. That comes from the trading account and the income statements. That's the bit that's complicated. Here we need to do two adjustments. Any additional incomes that the business makes get added onto gross profit. And then we write a total of all our expenses. And we need to do a simple sum to do a calculation of what the profit or loss for the year is. So the other incomes for this business, well, we've got a discount received, so that needs to go in. Okay, and the other income for this business is our commission received. Commission received where he's selling something for another business, for example, and if we're doing that, then that's money appears in the accounts. And I've cheated here, I'm just going to make those all black. Okay, and that tells me we've got an extra of 10,000 of commission received, additional incomes received by the business. So the total of these two added together, the gross profit plus the additional incomes, is going to come to 105,000. Make it black. Okay, now we go through and we list all the expenses of the business. So this business has got discounts allowed. Discounts allowed are an expense because we are reducing the amount of money we're going to get off our customers. Motor expenses, rent, property tax, interest paid, wages. So make those all go black. And we're going to put a total of all of our expenses in here just above the profit figure. And that's just to make it easy to do the calculation. Okay, and we've got our adjusted profit figure. Take away our wages is going to give us our actual profit for the year. So just as a quick recap, your gross profit shows you how much more you've sold things for than they actually cost you. We've got this sort of adjusted profit figure here. That's on any additional incomes that the business has managed to make. And then the final profit figure, the profit or loss for the year, used to be called the net profit. That then subtracts all the other expenses of the business and it tells us how much the money is made. You've got, and these are quite easy, you've got a couple of examples on the next sheet that you need to fill in. If you're year 10, you won't have the answers. If you're year 11s and you're doing this as extra revision, I will provide you with the answers. And what you need to do is to go through, correctly identify the additional incomes, subtract all the expenses, which should be listed in the left-hand column, total in the right-hand column, and then down at the bottom, you'll get your profit or loss for the year. Thank you very much for listening. I hope you enjoy doing the exercises, and I'll speak to you again soon.